Hi everyone, my name is Gangar and welcome back to my channel, The 1% Common Sense, where we cover various topics of personal finance and wealth creation. Today, we are talking about macroeconomic development that happened in past few weeks and how it impacts you and real estate in Ontario in particular. So let's find out. The pendulum is swinging again. It seems to me the central bank and government across the world and in Canada specifically are doing it again. Same script, same result. Overdo on one policies and bang. Let's find out how. Here are the key headlines for the month of June 2024. Canada's unemployment rate increased by 6.4%. Canada's inflation rate cooled down to 2.7% in June 2024. The unemployment rate increased in United States where inflation reduced in the United States. The housing sales and housing prices across Canada have declined. The biggest news to me has been that Canada's unemployment rate has reached 6.4% in June 2024. While the detailed review of this does indicate that the large chunk of the reason of high unemployment rate is because of labor force expansion and some bit of net job cuts. The labor force expands because the population in last 1 month grew by 99,000. In last 1 year, Canada had the intake of more than 1.1 million people across the country. That's huge. There aren't many jobs created to match this intake of population in Canada. Canada's population has reached 41 million in April 2024, a year-on-year growth of 3.2%, well surpassing the world's average population growth, the trend we've witnessed since past few years. This year, Canada has already reached a 50% goal of its 485,000 PR intake. Interestingly though, the non-permanent resident intake has been more than permanent resident intake. In total, Canada has already seen an influx of about more than 500,000 individuals in the country, well on course to reach 1 million individuals in the calendar year. Wow, that's huge. And to understand the implication of how immigration and population impacts Canada's economy, please follow the link in the description. By the way, if you would have observed, the non-permanent resident share of the total population has reached 7%, something which federal government might not be comfortable with, and in future they might issue permanent residencies to these non-permanent residents. Entering the second half of 2024 and with only about 3-4 months left before the holiday season kicks in, we are well on course to reach 7% unemployment rate on account of higher population intake and job cuts. In my view, even the interest rate cuts going forward in 2024 might not save us from reaching the unemployment rate of 7%. The pendulum has swung. The story of the unemployment rate is similar in the United States. The unemployment rate reached 4.1% in June 2024 versus 3.9% in May 2024. And this, mind you, in the context of the population growth, which is only about 0.5% in United States, the impact is more meaningful. There has been more number of people that have actually lost jobs in United States. On the other hand, with the higher unemployment rate, the inflation number in Canada came lower at 2.7% in June 2024 versus 2.9% in May 2024. Further drilling down on the numbers, it suggests that prices on fruits, furniture and travel accommodations reduced, helped lowering inflation, while mortgage interest cost, rents and insurance kept the prices higher, increasing the inflation. The other indicators that Bank of Canada looks at while deciding on the interest rate is the consumer's 1-year expectation of inflation and businesses outlook survey. Both of these metrics indicated that discretionary spending has been declining, wage growth pressure has been releasing, and there has been ample supply of labor. All these metrics suggest that inflation is headed lower and lower. What do all these results into for the housing market in Canada? In June 2024, the housing prices and sales across the country were down year over year. Talking specifically of GTA market, units sold is down to 6,213 units versus 7,429 units in June 2023. However, it's important to break this into types of properties, and we could see that condo apartment sales are down almost 30%, whereas single houses, be it detached, semi or townhouses, sales are down 10 to 14%. We will cover what is happening to a condo market in my next video, the rise and fall of condo apartments. But with respect to single houses, though you might be seeing that average prices declined more than condo apartments, but they are actually doing better and would continue to do so. In the last 3 years, in GTA market, more than 80% of new constructions were of condo apartments. They aren't making any more single houses. In fact, the new single houses that they construct are of all matchbox sizes. If you adjust for the population growth, there has been less and less of new freehold single houses available per population. This reminds me of a famous quote by Mark Twain: "Buy land, they aren't making it anymore," holds even true today. Finally, the question we have is, what will happen to economic system? What will happen to our finances as we look at these doom economic data? The unemployment rate is increasing, the interest rates are high, the default on personal assets, be it real estate or credit card or auto loans, have been rising. My take is it will get uglier before getting it better. A classic doom before a bloom scenario. It's a separate topic for us to make a video on, but imagine more than 45% of current outstanding mortgage are up for renewal in next 1.5 years. In fact, more than 30% of mortgage book of the top 5 lenders of the country has already reached more than 30 years of amortization period. What do you think will happen to the overall economy? What do you think the central bank and the government will likely let the financial economy to happen? You can get a glimpse of what likely would happen in the newsletter I wrote some time back. You can find the link in the description below. With that, I'm signing off for today. Please like, share and subscribe to my YouTube channel, and I will see you in my next video where I uncover the rise and fall of condo market. Until then, take care.